Hi there, you've joined us on Starting Up. Now, Skype, Hotmail, Tesla Motors are just some of the great investments that DFJ Ventures has made in the last decade. ET now, Sudhir Syal caught up with one of its global leaders, Steve Jurvetson, and chatted with him about trends in technology, the investment climate in the Silicon Valley, and his technology bet for the next decade. Hear out that exclusive.
Adventurer, rocket science enthusiast and technology geek. Steve Jurvetson is the global managing director of Draper Fisher Jurvetson, a world-renowned venture fund which has invested in startup successes like Baidu.com, synthetic genomics, and electric car manufacturer Tesla. The investment he's most famous for, an email service we've all used at some point of time, Hotmail. We started the interview by asking him to take us back to his first meeting with Sabeer Bhatia.
So Sabeer and Jack had this great idea. They had a company called JavaSoft Inc., and it was a web database tools company, literally software that programmers would use to build web applications. And they sent me a business plan on paper. It was on my desk in a stack of plans I get each week, and I was looking through it, and I'm like, well, this is interesting, and I'll meet with these guys. So a couple of us, my partner and I, John and I, met, and we're hearing this pitch, and we're not liking it. And we're saying, you know, God, how is everyone going to ever discover your tools? Why would anyone bother? And then they said, well, wait, we got an idea for the marketing. In 3 months, we'll pull together this web-based email thing. They didn't have a name for it. It would just be web-based email. And consultants like myself would use it. Students would use it. You could use it between summer jobs. It sort of clicked and made sense. And their business idea was, well, gosh, everyone who uses this product would want to know what tools were used to build it. And I want to buy tools like that to build my own applications. And so that was the founding vision of JavaSoft Inc. And we instead thought, gosh, why don't we just give you enough money to do that 3-month project? We'll see how that goes, and maybe we won't revisit that whole tools thing.
So what was Sabeer like back then, and what made you develop faith in his abilities?
Yeah, so the faith in his abilities came along 2 avenues. One was his just what I call hallucinogenic optimism. He was so convinced of the vision of the future that was going to unfold around his product, and had such an aggressive forecast of growth that it was endearing. At first, it was so cheeky. It was so I mean, to say I'm going to grow faster than any company in history is a bold statement. To do it without choking or smirking or laughing is remarkable. And he was right. He actually did grow faster, and exactly according to his forecasts. That was one. The second was he was a phenomenal negotiator. First, he was negotiating with me on that first investment, and I saw firsthand what an astounding sense of prowess he had. But then that played out in spades to be very helpful as he negotiated business deals and eventually negotiated a sale to Microsoft.
Fantastic. So the sale to Microsoft, that was a big event for both DFJ and for Sabeer.
That's right.
How did that happen? Who rang the bell, or who picked up the phone in this case?
That's right. Well, it started with Microsoft wanting to do a business deal. They spent about 3 months getting to know the company in the sort of with the rubric or the idea that they would do a partnership. Looking into it and doing their work, they realized even if we built our own, we would never catch up given their exponential pace of growth. So they got more and more antsy about buying the company.
Right.
And so we as investors actually tried to convince them not to sell.
Okay.
We tried to create alternatives. But ultimately the price got higher and higher and higher. It kept going up. At one point, Sabeer's mom was chastising him, saying, you call that man Mr. Bill Gates back right now and you take his money. What are you thinking? Do you know how much that is in rupees? And so he felt a lot of pressure, both from his family and his vice presidents, to take the offer on the table. And he kept holding out. He kept holding out till he hit his number.
So it's been 16 years, Steve. You've been investing in companies, mentoring companies, right?
That's right.
And you know, money has become a commodity, right? Every investment fund has money, and and if an entrepreneur is really hitting the right spots, he has a choice of which investor to go to, right?
Right.
So what is the most valuable contribution, in your view, of a venture fund to an entrepreneur?
That's a great question. There's a whole bolus of value around Rolodex-related benefits. Who do they know that they can connect you with?
Who do they know and how well?
Exactly.
Right.
And is it global?
Right.
Is that Rolodex global? And that Rolodex, by the way, includes key employees you're trying to hire in the early days, your vice president of whatever that you're missing. It's early customers. You know, one of the companies I was involved with, I think we personally as a firm signed up 3/4 of their initial customers. It's other distribution partners and potentially acquirers or banks, depending on which way the company's leaning towards an exit scenario. Sometimes we can also bring insight. I mentioned that second because it's you know, you can't promise it, and you can't, you know, overstate, or you shouldn't overstate the value here. But sometimes we've seen patterns before.
So, Steve, I want to go back over the last decade and the state of the venture capital market in the U.S., right? Sure. So, 2009, we had the dot-com boom and the subsequent bust, right? And if you take one decade from there, if you take 99 to 2009, right, and you track the returns of the VC industry,
they're still positive. But if you take 1 year ahead and you go to the time when there was the bust, and you take 1 decade after that, in VC investment returns are actually zero or almost negative, right?
For now, yeah.
Yeah, for now. So, in your view, what is the state of the VC market in America? And do those figures, those 1 decade figures, do those worry people, or does that worry the VC industry?
It worries the investors in the VC funds.
Okay.
So the people who gave the money to the venture firms, they're very worried about the fact.
The limited partners.
Yeah, exactly.
Okay.
You know,
How do you justify those returns to an investor?
Take a longer term view.
Okay.
Take any sliding 20 or 25-year view, anyone, including the last 25 years.
Okay.
And early stage venture capital will be the best performing investment category there is.
Okay.
Better
So you're
than
saying
oil
the
and gas,
decade is
real
just a
estate,
statistical...
Exactly.
Okay.
Because you've had, the liquidity events have been delayed. So IPOs have been backing up. We had 2 IPOs last week in the same day. We've never had 2 in the same day. We have a 3rd one on file. Second thing, though, it's somewhat of a cheeky answer, but I think the last decade, a lot of venture firms who could have been looking outside the United States.
Okay.
So one of the, like, what are they doing in the U.S.? They're like getting the heck out of town.
So I was there in the Valley in 2008, and it was quite a bleak scenario, right?
Yep.
So we were just recovering from the Lehman fiasco and so on and so forth, right? So post then, has the scenario improved? And what are limited partners, what's their view on investing in venture capital funds now?
Right. So the startups definitely continue. I mean, first off, the pace of scientific innovation has no impact in relation to the economy. So new inventions are occurring all over the place.
And that's going on at
synthetic
the back
biology,
of US
nanotech. So the science side of it, the engineering side is blooming. The businesses built on that are also doing quite well. Finance is not so great. So if you're trying to raise money, it's as tough as it's been. You know, well, 2008 was really tough, and it's still pretty tough.
A lot of VC funds in America have come to India, right? Has the attitude of investing in India changed? Have you all in some way been bellied by ground realities?
Not so much. We're perpetual optimists. And so we look at the fundamentals of the number of engineers here, the demographics of the country that bode well for the future, the sheer size of the market, and the opportunity in all kinds of areas for domestic opportunities in energy and clean tech and such and so forth, and frankly, digital media.
But having said that, most investors who came down here were probably looking at exits over a 3 to 4 year time frame, and it's probably taken much longer.
Well, those were unrealistic expectations.
Okay.
Why would India be superhero status, right? So in the U.S., we normally across all markets expect sort of 5 to 7 years to get to an IPO or liquidity event or from a first investment, early stage investment, and we would expect India not to be any quicker for any reason. During the dot-com boom, everything got compressed. You had 2 year, 3 year things, but that wasn't normal, and we shouldn't expect that.
Okay, great. So you think things are on track in India, or things are slower than expected?
Only maybe in digital, sort of online digital, right? Payment systems, penetration, broadband penetration to the home. There have been some structural impediments, perhaps, to the pace of the uptake of new internet services compared to, say, China. Right? You might say it's 3 years lagged.
So, Steve, looking at your portfolio in India, right? So you have a host of companies all across multiple niches, right? So you have ClearTrip in online travel, you have Atero Recycling. So which are 2 of your favorite companies?
Yeah, right. So it's an unfair question because as a parent, it'd be like, what's your favorite child? Come on, tell me. They're different. One's a boy, one's a girl. They have different growth rates.
Which are the 3, 4 that have made waves at the DFJ head office?
Sure. So there's a bunch. I mean, you mentioned a number of them. So Atero, ClearTrip, and Ginger, iYogi is doing quite well. They're just going gangbusters.
Canva has also been doing well.
Canva, exactly. So, and they, I was just there yesterday, and they have a great opportunity to branch beyond the wedding photography sector that they're currently focused on to all kinds of interesting opportunities for both professional photographers and online content.
So, Steve, let's zoom out a little bit. If it's web and, say, applications, mobile applications that have caught the fancy of industry over the last 10 years, which of these high-tech technologies do you think will really grow the fastest and define the next decade?
I think energy and clean tech will define the next decade because the market size is so huge. We're talking about trillion-dollar markets. Take water purification alone. Over the next 20 years, there'll be $1 trillion spent globally on new water purification systems. That's staggering, right? You've got, and that's just one subsector of the energy clean tech umbrella.
Steve, we have a whole lot of entrepreneurs watching the show. Great. So one message from someone who's met a whole number of them, who has invested in companies that have gone on to become global leaders. One message to all the entrepreneurs from what you've seen over the last 2 decades.
If you are trying to change the world, if you really are trying to get a big business, not just yet another whatever, the way you take feedback can be important. If you have some new idea, something compelling, and you present it to 10 of your friends, and they all tell you it's a great idea, it's probably not a great idea. It's probably not compelling enough to change the world. If 8 of your friends say that's ridiculous, 2 of your friends think it's brilliant, it's probably the perfect mix.
Steve, it's been a pleasure having you.
Thank you.